Good morning, investors and traders. In today's segment, we'll be focusing on what is moving oil prices, i.e., the fundamentals, the factors that are behind the current aggressive oil prices move, and how high the oil price can really go before we can see a retracement, and if there is a retracement. And more importantly, where is the opportunity for you guys in the current trend that we are seeing oil prices? That will be all part of this particular subject. If you haven't subscribed to our channel, I highly recommend you to do so. Here is a risk warning and disclaimers for your information. If you have any questions, please feel free to get in touch with your own account managers. A bit about myself. I come with a wealth of 15 years of trading experience. During this time, I have worked as a hedge fund trader for Bank of New York Mellon, as an equity trader with Bank of America, and currently providing services as a chief analyst for EverTrade. Now, the chart which is in front of you is the chart for Brent oil price, which is recording a price of 87.78. This is the highest price level since 2008. But if you look at the price action, we have to go back on the weekly chart, sorry, 2018, so that you can see right over here that back in 2018, we saw the oil prices reaching around these particular price levels of that 88 or 87, 82, right over here. Ever since, we saw only a major decline in oil prices when the price reached this particular price level, and the price was only moving in one way and they were in one particular direction, and that was to the downside and reaching that price level of $14. But in reality, the prices went below zero during the peak of COVID crisis, and we all know why that happened, because the world came to standstill, which pushed the oil prices to these particular levels. But when the economy began to open, and which would happen again in 2020, we saw the oil prices soaring, and now they are at this particular price level, which we haven't seen since back in 2018. So this is an incredible journey for oil price. But the question really for investors and traders is why we are seeing this particular price move, why such an aggressive price surge that we have seen. Well, the answer to that is based on a number of factors. Number one, traders believe that Omicron, which is a variant of COVID-19, isn't that devastating for the global economy, and because of that, we are going to see higher demand for oil prices. Right. Number two, on the supply side, the OPEC Plus, which is an organization of Russia, Saudi Arabia, and few other major oil producing countries, they believe that the current oil supply is more than enough. They are not ready to increase supply aggressively. They are only going to increase supply gradually, and that is very much influencing the prices as well, because we have a less supply and more demand. The third factor which is influencing the prices for oil is, of course, the geopolitical situation. Traders are keeping a very close eye on the ongoing tensions between the US and Russia, because some US officials, they have said that it appears that Russia is preparing for an attack on Ukraine, and that means supply disruption, and of course that is also being factored into the price. Now, the question for you guys is that, is there an opportunity for given where the prices are right now? Can we trade this particular price action? Should we short this, or should we continue to see that how far the price can really go from its current price level before we could actually see an opportunity? Now, when we look at the price over here, we can clearly see that yes, this particular price level is already gone, because the prices have already gone above that particular price level. So we have to see where is the next major resistance, because this resistance is no longer valid. Now, but looking at the price action, it appears that the next sort of a major resistance in terms of the price action is really going to be on the top of this one, and that means 97. I mean, that is a huge difference where the price action is trading currently. So, we don't really see that price action really going all the way to 97 anytime soon. So then that means that we have to look over any closer sort of a resistance, and then the closer sort of a resistance that we really see is right over here, that 84 sort of a price level kind of a marks a really good resistance. But really, if we look at the price action over here, we actually don't have any meaningful resistance until the price continues right over here. Now, of course, if I change the time frame and go into a monthly time frame to see some sort of a clear picture in terms of an oil price, then what we see really here is just there is no major resistance apart from where the price is trading right now, meaning the low of this particular candle or the high of this candle where the price is really trading, but which is like 87.53. And we already know by looking at the price action that we have already gone a little bit above that price action, because this is where we are trading. So the meaningful resistance under those circumstances is really $95 or something, which is the high of this particular month. But on the weekly time frame, if we try to see a clear picture of that one, what we really see under those circumstances is the where is that resistance, where is that particular price action that can really give us some sort of an indication that the price where the price can find the resistance. Then we do have this particular area right over here. So if we mark our lines right around these particular price levels, we could say that 94 to 97 is going to be the resistance in terms of the price action where we did see this sell-off happening. However, having said that, I do see this particular area right over here, just right around over here, between 91 to 94, or well, actually not even 94, just right over here, 91 to 93, as another area of resistance as well. Of course, this is a much better area, but right around this particular price action is the area that we could see a resistance forming as well. Now, given the fact where the prices are now right over here, the double top seems to have formed. What is a double top? A double top is basically a reversal pattern where we have a one top formed over here, the other top forming over here. This is sort of a reversal pattern. What this shows is that when the price reaches into the same area, we could potentially see a price momentum moving to the downside, but the RSI, which isn't which hasn't reached the level of 70, and 70 is where we do actually see the prices moving to the downside. So there's a still potential for the prices to move a little bit more to the upside. So once again, if we look at the price action, what we really need to see, what we really need to focus on is this area of resistance, which is going to be right over here. So that $90 mark is the resistance level that we need to be focusing on, because I don't really think that we're going to see a massive retracement right over here, because if we compare the price action where it is now and compare to this one, that double top didn't really react the way that it should have, because the prices have continued to move to the upside. If I just zoom into this area to show you guys a little bit more, so the price has already crossed this particular area right over here. Now, of course, we are looking at this particular area right over here, sort of this particular level, but we could already see that the prices have also already violated those particular price levels as well. So really the next area of resistance in terms of the price action is going to be right over here, 90 to 93. But one thing that I do want you guys to focus on, which is another sign of which says that that the prices can retrace, is the price is very much away from its 50-week moving average, which is right over here. This is your 200 week, this is your 100 week. So the more the distance between the price and the 50-week moving averages, the greater the chances of a retracement taking place. So on the weekly time frame, I wouldn't really go long right now. What I would, because the price is already overextended, the possibility could be on the short side. If one wants to take a long position, you may not want it to go all in. You may just want it to go with a very short sort of you want to consider your risk to reward ratios very, very carefully. But overall, yes, there is still a little bit more room to the upside, which can potentially happen in terms of the price action. But the RSI is already showing that the prices are overstretched, so the possibility is more to the downside in terms of the oil prices. Really, there is. All right, that's all for now. See you guys next time.